All right, guys, we're back with another trade recap. Today, we're going to go over my second and third trades of the week on EurUsd. If you saw yesterday's recap, we were trading CAD CHF long. We pulled a little bit more than 1% gain yesterday, so it was a solid win, and it really made me focus today. I wanted to come in, stay on edge, stay on discipline, and follow my rules really well, and that's exactly what I did here today, and we pulled a little bit more money today than we did yesterday, so the profitable week continues here, like I said, with EurUsd. Now, we're going to get into this breakdown. I'm going to show you everything that I liked about the trade, but more importantly, we're going to address something that kept a few of the traders in our VIP chat out of this trade. I'm going to show you something that, like I said, could keep you out of the trade, but I'm going to show you how I used it to actually help me read risk reward and feel confident to take the trade. If you're new to the channel though, my name is Austin Silver. Like I said, I don't know if I said that already. I think I did. This is my 17th take of this intro, but we're going to roll with it. If you're new, my name is Austin Silver. I appreciate you being here. I'm not a YouTuber. I'm a trader first and foremost, and that's why it takes me 17 takes to get this to happen. But if you find value from the content here, if you find value from what I talk about in my trades, do me a favor, just give me a big thumbs up and subscribe. That's going to make sure you don't miss any future videos, and it'll also make sure we spread the value in my content, not in my fast speaking. We spread the value in the content to other traders in the community. So I really appreciate that. Let's take a look here at EurUsd. I have the P&L blown up above my head. So you'll see the first two positions were earlier this morning. These two positions here at 109.43 and 109.46, both of those positions ended up pulling about a 1.28% gain. Not a bad win, a very small scalp. It was very quick, in and out in about an hour, as you can see. However, after that first entry, it ended up pulling back down, representing another entry, and that's where I got in here. You can see with this third position at 109.47. That was my second entry, but technical third position of the day. That second entry took a little bit longer, but ended up being another piece that ended up putting me up about 2.35% overall today. The thing that you should take out of the trades today is that they were very low risk. The stop on the first entry was about 4 pips. The stop on the second entry, second positions, was about 7.5, 8 pips. So very low risk. When I'm able to risk 4 to make 10, risk 4 or risk 7 to make 12, those are good trades for me, especially on a setup like this that we're going to go into in a second, that we would grade as a C setup. So if we flip from the P&L just to take a look at the price action, I want to start on the 15-minute and show you the divergence that kept most people kind of weary about this trade. I look at price action on a weekly scale. So I'm looking back on today being Wednesday, I'm looking back to Monday and Tuesday, and you can see Monday we kicked up really hard on EurUsd as the dollar index fell off under 100. Yesterday, we saw a follow-through to that move, and that follow-through up towards 109.60, 109.70, that follow-through yesterday is what created the bearish divergence from Monday's RSI overbought position way up over 81, 82, which is very, very high. So then when you see the RSI tried to break higher yesterday, but it can't, and price does, we then have a RSI high that's different than our price action high, which tells us that there's bearish divergence present and price action may need to change. I think the change happened overnight as we broke under the 50 EMA, couldn't hold, and got back above it. When I woke up this morning, I saw price was making higher lows off the 50, not even really touching the blue 50 EMA, and holding the 21 EMA. So I drew the divergence from yesterday, and I could see that the RSI had actually inched its way above the divergence line, which told me that maybe it was broken. So now I'm seeing price hold above the 50 EMA, I'm seeing structure make higher lows, I have my bias from the previous 2 days, and my RSI is above the divergence line. Now I'm using the price action divergence line, which is this purple line up here, to be my take profit. So I'm looking at this, and I'm looking at ADR. I'll put that indicator on so you can see. ADR was to 80 pips here, right? So I had plenty of space to move on ADR, plenty of space to move if I was trading up towards where this divergence line would go, right? Plenty of space to work. So it made sense to still be long biased and still take entry signals that presented in my favor going in that direction. The first entry presented here at about 5:15, I was in and out of that trade pretty quickly. The second entry here that I have marked presented around 6:45. If we take it to the 1 minute, you'll see, I'll blow it up really big so you can see, you'll see what ends up happening to me here. So let me lock this in. So here's the first trade. I took my position back here at 5:15. It went up about 10 pips, which was over 1R. I closed most of it and then got stopped as it pulled back down. In the pull down, in the pullback, I should say, it becomes divergent on the bottom in a bullish formation with an RSI rising and price falling. It then pushes through the 15-minute 50 and ends up coming higher. That signals the D1 entry. The D1 moves higher. I closed 50% of the trade as it moved up over 1.5R, right? With that 8 pip risk, we go up about 12 pips. We're almost at 2R. I'm going to take some profit there. That's where I took 50% of the trade. Remember, if you look back at the P&L, right there at 11.8 pips, right? Then, as the trade kind of slowed down at that same high here, I closed a little bit more as we broke back down. My stop loss was then in profit at 109.49, and you can see where I marked LOL. That's literally where it pinned me out, where my stop was in profit, and then it moved higher from there. Now, a lot of the time, and this is important to discuss, people will look at that and they'll say, well, Austin, why did you move your stop in profit? If you left it alone, you would have been safe. You could have just held the trade all day. It would have been beautiful, right? For me, it's much more important to stay consistent and follow my rules based on how I graded this setup. If we go back to the 15-minute, because of the divergence and because of the fact that it was a swapping TDI, I gave it a C setup. And on C setups, once I take my profit at 1.5R, 1R, I move my stop loss into profit to make sure that I can't give back any money. Because just as unlikely as it is that I get pinned out right before it moves 50 pips like this one, it's way more likely that it doesn't pin me out and that the C setup comes down lower. More times than not, that's what's gonna happen. Most C setups don't run 51 pips like this one did. Most of them will come back down and stop you out for a loss, which is why it's important to put that stop in profit, because we want to work with probabilities. More times than not, we know that that's what's going to happen. So here, luck just didn't work out for me. I still ended the day profitable. I'm still up over 3% on the week, so I'm very happy with my performance. And I'm happy that I didn't feel any FOMO as this trade continued to go higher, and I didn't chase into it in the afternoon. Because had I bought into it later in the day as it broke out, what if it didn't work? What if it turned down then? I'd feel really stupid for chasing it, right? So it's much more important to have exit rules. For me, exit rules that fit a grade, A, B, or C, however you're going to grade the setup, and then you just follow them every single time and build them into your system in a tested way so you know that they're going to put you in a profitable position in the long run. You want to build a positive expectancy into the system. At least you want to build rules that give you a positive expectancy, I should say. So again, even with the first trade, when I was long earlier in the morning, here off the 21, as soon as it moved up over 8-9 pips because my risk was only 4, that's over 2R. I'm taking most of that trade. Like you saw, 75% of the trade comes off, stop loss goes into profit, can't give back any money. Boom, all right, I'm out. Stop me in profit, cool, where's the next entry? Oh, I found it, great. Let's get back in and manage it appropriately depending on the grade. So I hope that that's how you guys are starting to see here, the patterns in my trades, the patterns in my management, because it all does go hand in hand. It all goes together when you're really trying to put this together over the long run and stay consistent. And again, this happens today, this EurUSD push happens as the dollar index falls over. And this looked very bearish today. If you take a look at the daily, and I'll turn off that ADR indicator, you can see yesterday we broke under the 8 and the 21, we held under the 8 and the 21, and then today pushing off the 50 EMA, going a little bit lower. So kind of riding that momentum almost to the downside, and EurUSD, of course, working the inverse of that. While this was going on, I think it was really interesting and important to note, we've seen Bitcoin actually take a big hit today from 9,800 all the way down to 9,280, now back up at 9,508. So we'll see what happens overnight, but some interesting volatility there after a pretty slow week overall. If you also take a look at EuroNZD, this had a really interesting short idea here. So look at the level created last night. You have your support zone set here at the initial push down during yesterday's London session. That is then your zone of resistance, like I would call it a price sensitivity zone. When we retested that zone overnight, we fell off it. When we retested the zone here during the London session, what happens? If you take it down to the 1 minute, you're going to find bearish divergence on top that's going to signal you coming out of that zone, and that's where you're going to know to trade short. Look at the bearish divergence like I just said. RSI high here, that comes down. If you blow that up, you can see it. If you double click the TDI, it'll blow up. You can see it's falling, definitely falling left to right. You draw price action, the same points. You can see that's rising. What happens when we break down through that zone again? That bearish divergence sends us lower all day. So you can take the 15-minute, find your bias overall, find your sensitivity zones, and trade in the direction of your bias. Look at yesterday. It dropped. What did it do the day before? It dropped. Where's the TDI? In the sell zone. Clearly, you're just looking for shorts yesterday and today. So this is a very clear short idea here. So you could have been short EuroNZD at 4 o'clock and then long EuroUSD at 6 o'clock, and they both would have worked out for you. So that covers a good amount of information for today's video. I hope that you found some value. If you have any questions, please drop a comment down below. I'm more than happy to clarify anything. Make sure you check out my new interviews that I've been doing. I've got Jason Greystone, I've got Steve Burns, I've got some of our ASFX VIP members, some ASFX coaches. We've got a whole wide variety of experience there, so make sure you check out the other playlists. I really appreciate that. And again, if you found any value, if I talked a little fast, make sure you rewatch. But if you found any value, make sure you give it a thumbs up. Make sure you subscribe, and I'll see you guys in the next trade.